This week's strategy landscape is shifting again. Volatility failed to break higher and printed strong bearish signals, hinting at a continued calm down phase. The dollar continues to solidify its mid and long-term footing, while the yen weakens exactly along the trajectory we've tracked for months. Global trade is stirring beneath the surface, bond yields are stabilizing, and sector dynamics begin to turn. Let's frame what matters for the week ahead. And as usual, we start with the Volatility Index. This is the daily closure on Friday. First of all, I would like to say we have two bearish candles for the Volatility Index itself and for the futures. We have a strong gravestone doji here, which is also could be viewed as a bearish hammer. And we have a bearish Rami cross, which is also a spinning top, potentially spinning top for the futures. So the chances for a move lower are significant. And although we might see an attempt to revert these candles. If we look at the weekly frame, that's even more assuring picture. First of all, I'd like to say that both indices failed to form a bullish continuation candle by closing below the high of this red candle, and now we are looking for a bearish continuation here. Whether we might see another green candle before or an immediate move lower, that's still a question, but the odds are right now bearish here. Now let's have a look at the dollar index and what candles are telling us that dollar continues to build and solidify its mid and long-term footing. First of all, I would like to say that the dollar weekly closed with a bullish continuation candle, most likely, and it flipped the 8 by 20 EMA bullish lines in the bullish cross. Marginally, but still it counts. And the 10-day frame was closed on Thursday with a huge green candle, which is a bullish continuation one. The 15-day frame is on track for another bullish closure, and unless dollar has a strong sell-off next week, the 15-day frame will also form a bullish candle. We had a little pullback here, which was a rejection of the 200 days moving average, but considering the growing strength in the middle and long-term frames, I think this is just a temporary one and just the first attempt. Most likely, dollar will break through the 200 days moving average, the red line, and gain a strong support long term. If we look at the chart, this is the one that we are tracking since November 8, 2020, actually for 5 years. And I think that this is a consolidation here, is a closure of completion of a bullish flag that dollar have been forming for almost 3 years. And now we would be expecting wave 5 here. On the short-term perspective, this is the flag itself, which started in October 22, and now it is ending here in the area that we identified well before. And now the chances for a continued rally here, long-term, multiple months rally, are significant. Now, if we look at the yen trade, what we can see that yen is continuously losing to dollar. The 10-day frame closure was clearly bullish continuation this week, and the 15-day frame, which is closing on Tuesday, also on track for a strong bullish continuation candle. The weekly is inconclusive, most likely it's just a posing candle before moving higher. So Yen is increasingly bearish while dollar is gaining more footing. The chart that we are tracking since November 2023, we had no changes here, and the target remains the same for potentially wave 5 of 3. So that's all for yen, and now let's have a look at the Baltic Dry Index, which is viewed as a leading indicator for the market. So an impressive weekly closure with a strong, very strong bullish engulfing, pulling the price above all moving averages and potentially completing this big flag that started way back in July. On the 15-day frame, BDI is tracking for a bullish closure, and the 3 months frame, I already mentioned it, potentially for a huge tower, for a huge double bottom, which would drive prices way higher. So I think that the global trade is on its rise, and we still yet to learn how powerful it could be. And the wave that we are tracking since when we are located, it's since the beginning of July, so it remains unchanged, the same perspective, and I'm expecting it to move higher, somewhat similar to what the BDI did in 2021. So that's an impressive bullish structure and impressive bullish signals. Now let's talk about the bond market. What we are seeing here is that this is the 10-year yield. What we are seeing is a neutral bullish candle on the weekly closure, potentially lifting the yields and signaling a move higher. However, it still needs to be confirmed. On 10-day frame, closed with a strong piercing line, and the chances for a move higher are fairly significant on that frame. After a failure to form a monthly continuation, bearish continuation, I think that yield is consolidating here, potentially forming a bottom. Let's see what happens at the end of November. So far, the odds are neutral, leaning bullish. If we look at the short midterm frame, this is how I can view, I can see this wave that is currently forming. Potentially it's a very complex, and it can morph into various formations. So for example, it could be an ABC formation, like a big one, or this wave, if considering this is wave A, B, wave C could be a triangle, which is also one of the classical patterns. But we will track it on the bi-weekly and monthly basis in general, because this is a very slow moving asset. This is the long-term chart that we finalized in December 2022. So this chart is soon will be 3 years old. No changes so far. So this is the original chart that we tracked then, and wave 1, as you can see, I'm viewing it as a completed impulse, and now wave 2 is being developed. So it might take another couple of years to finalize wave 2 before we see another move higher. Okay, so now if we look at the spread, so what we are seeing that it's potentially over. This the weakness is over, and the weekly candle is bullish, so I would be looking for a continued normalization of the curve and continued move higher. This is the chart we've been tracking for a while. Now let's quickly look at the Canadian market. Canadian 5-year yield is actually forming a bullish candle. But there are still 3 weeks to go in this month, and I mentioned last week that it failed. It strongly failed on the bearish side to form a bearish continuation. Now it's time for a bullish candle, and it looks like it is happening as we speak. Well, let's see how it ends. How it ends in November. Whether the Bank of Canada would be able to hold the rates or start lifting them. Well, now let's move on to the next section, and this is TLT. TLT is in an extremely critical spot right now. So the daily candles are not decisive, so it still can be bullish or bearish move, and I'm not liking the fact that it lost the 50 days moving average, which is a blue line, and now is moving towards the next support, which is a double support, 200 and 100 days moving average. The weekly was bearish, however, not very decisive because of the candle structure and its positioning. What is the next? What would be the next is the 8-day closure on Tuesday. And what is critically important here, on November 11th, is to hold above this line 89.01. If TLT holds, well, it will have a chance to continue the bullish path. However, if it closes below this line, it will be a confirmation of a top on a bigger scale, and I would expect a continued move downward. So the monthly wasn't decisive very much, and we would be looking for the next candle in November. Speaking about the Elliott waves, that's also a critical path here. In order to keep the structure, TLT needs to hold above the 88.44. If it fails even one basis point below, it will be a broken structure, and we would be looking at best for a diagonal here. But these structures are not as has a probability as the clear impulses. Well, two critical tests for TLT on Tuesday. It must hold about 89.01, and it shouldn't fall below 88.44. Let's see how the market holders execute this. Now let's talk about the sectors, and we start with the technology. An interesting, very interesting closure on Friday. At the beginning, it scared everyone. The candle scared everyone by pushing below the 50 days moving average, and it was a huge red one, giving headaches to many. But at the end of the day, it was a very nice rally, and it recovered into a bullish, potentially bullish inverted hammer candle, getting a strong footing on the 50 days moving average. The same move also helped to push the weekly candle above the 8 days EMA, which is a strong support. Now, even if we have bearish engulfing, it could be somewhat similar to what we had here. Let's see how it executes next week. And considering this is a bearish failure, I extended this wave, which we have been tracking since June technically. I think that the most recent top was wave 3. At least it is supported by multiple technical indicators, and if we have a bottom here, I would be looking this as a wave 4 of the bigger impulse, which can potentially end somewhere here. And if this is the case, I would be looking for 10 to 15% gains in the next quarter or so. That would be an impressive rally for technology, and also the technology would be leading the market. Now let's have a look at the financial sector. So what financial sector is telling us? This is the daily closure. We have a strong bullish candle, and potentially it's a big flag, which is better viewed on the 5-day frame. So for example, like this, I would like to show you. So this is a 5-day frame, potential bullish flag. And now if we look at the monthly, the weekly, first of all, weekly is a bearish failure. So it had a chance to confirm a reversal, but it didn't. Now bulls are in the driver's seat, and the next candle which will be closing is, again, it's Tuesday. The 8-day frame, so far it is on track for a solid bullish engulfing. If it closes like this or a little higher, it would be a solid bullish sign. And the chart remains the same. Oh, I forgot to change the date here. So it is no changes since July 2023, and I didn't even update any numbers, any elements on this chart. So far it is tracking as designed. Now, so we have good potential for the technology on the point for the financial to resume the rally. Now let's have a look at the other sectors. So this is the daily closure on Friday. So financial, strong bullish candle, industrial, bullish engulfing, technology, staples, healthcare, communication, and energy, all closed with bullish candles. The only one is the bearish continuation is discretionary. Let's see, but discretionary, it's only 10-11% of the entire market. So if the other ones are bullish, well, this is a recipe for a huge lift in the beginning of next week. And if we look at the weekly closures, this is a bit mixed, but again, we are seeing financial. It's a bearish failure. Industrial, also a bearish failure. Technology is 50-50 at this moment, so we will be looking for Tuesday, remember. So staples is mostly like a bearish candle, but with a good chance of a lift. And communication, fortunately, the weekly is bearish, but the daily is strongly bullish. Let's see who wins, and we will know the momentum in the next couple of days. Healthcare is bullish. Consumer discretionary is bearish engulfing, as and as expected is the most bearish among all. And energy has an excellent bullish candle. So, and the final discussion today is about large caps. So what we are seeing here, Microsoft potentially completing a big ABC correction, and I outlined the next most probable moves in that monthly report that I shared yesterday on the website. If you're interested, you can have a look there. Amazon potentially saving from the bearish continuation, getting for a reversal. Apple is somewhat neutral. We'll have a look at it. Tesla has better chances to move lower. Berkshire Hathaway, a fantastic bullish reversal that we discussed way back in Tuesday on our Discord channel after Berkshire formed this huge bullish engulfing candle, and I said that this is going to be a rally from here. So far it is happening, and Now let's have a look at Alphabet. Google failed on the downside, so now it is looking for higher prices. NVDA, it's I'm not sure this one. This is technically a bearish continuation candle, but this also could be a bullish. But bears have better say here. If we look at the weekly, it's a bearish engulfing, so I think that NVIDIA will be weak next week, at least next week. For Meta, I'm planning to update in a special analysis for the stock. So that's all for discussion on stocks, and now let's have a look at our swing room. Our swing room was short on November 3rd, and we were holding the SH instrument. Signals for November 4th and 7th remain private for live trade members. Over the past 12 months, the room unleveraged portfolio gained over 40% versus the S&P 500 only 13. No leverage, no noise, just precision, patience, and disciplined execution. Captain David leads the room with consistent, repeatable setups. If you've ever wondered why traders stay ahead of turns instead of reacting to them, that's what the room is built for. And now let's summarize. Volatility printed convincing bearish signals after multiple failed attempts to rally, suggesting a continued cooling trend ahead. The dollar keeps building a strong technical base that reinforces mid and long-term bullish odds. The yen continues to yield ground in a controlled, predictable fashion. The Baltic Dry Index delivered an impressive bullish turnaround, hinting that global trade activity could accelerate sooner than many expect. Bond yields remain in a normalizing range while the 10-year holds steady. TLT faces a pivotal test on Tuesday. Technology XLK must be completing its correction with potential for double-digit gains if confirmed next week. Financials appear to have found a bottom after a notable pullback, and the long-term outlook remains unchanged for multiple years. Across S&P 500 sectors, most closed Friday with bullish daily candles. Weekly closures are mixed but lean constructive. Large caps sent mixed messages into the weekend, making the start of next week a critical read. For deeper clarity on Microsoft, Nasdaq, and other major drivers, the written weekly reports on the site contain the full charts, levels, and Elliott Wave scenarios. This video is the overview. The details are in the reports. As always, engage with the charts, share your perspectives, and support the channel with a like and follow. If you are new, you can still begin a trial that includes written content and live trade access. At Investing Angles, we chart the charts before the crowd even blinks. Thanks for watching.